Hello? There we go. Not bad. Okay. Hey, what's up, Ted? Just looking at this Alibaba chart, reading an article on the news here on Thinkorswim about Charlie Munger. His name? I don't want to. Yeah, Charlie Munger, Warren Buffett's mentor, just increased his bet on Alibaba. So here's Alibaba. Apparently, company going to grow a lot in the next couple of years, and they are at a pretty steep discount on the U.S. exchanges. And for various reasons, Charlie Munger placed some big bets on Alibaba, down about 50%, 160 to 320, and down by 50% from the highs. Definitely looks like a Warren Buffett slash Charlie Munger type of a play. So not bad though. Technically not bad either here. Got a really big high volume candle here, and another big high volume sequence down here in this last low right there. So far, currently chopping it up above the shorter term moving averages with resistance at the 50-day, and then obviously the 200-day trailing well up there. Yeah, so from like a really long-term perspective, Alibaba is in an interesting position. There's still a lot of political unknowns with the name. I guess they were talking about the SEC maybe trying to get rid of Chinese companies on U.S. exchanges. But being the fact it's audited by one of the big four auditors, Charlie Munger thinks that it's not going to get delisted. Because that's, I don't think they want to get rid of like the legit Chinese companies. But anyway, that's what I was looking at there. And pretty good volume yesterday. I'm not sure why, but good volume here. We undercut coming back yesterday with really good volume. I think is a positive sign. So, excuse me. And then Tesla had its call. Technically, it was the shareholder meeting, and I don't know. Wasn't much impressed. Of course, there's nothing to be impressed by with Tesla until these gigafactories are probably about a year from now until these gigafactories are really underway. That's going to be when we're going to know the what's what with Tesla. I think we know they're coming up. We know there's growth coming up. The question is, how fast can they get it going? And he didn't completely answer those questions, but he did talk about the Austin and even the Berlin factory in terms of building the factory, then getting to scale. He said it takes about a year to build a factory and about a year to get to scale. Makes sense. He said that China took about 11 months to get to scale after it was built. So just in under 2 years, that one got to scale. So these factories are almost built. So then we're looking at another year of ramping up, and then we'll be in full volume production. Also said that the Fremont factory, they're moving their headquarters to Austin. That'll free up a lot of space at the Fremont factory for just production, and that should increase the Fremont factory capacity by 50%, which I think is pretty cool. It didn't sound like he was keen on building any new locations for gigafactories. They're just expanding on their current locations, and they have a lot of land on their current locations. So I don't think that's necessarily a bad strategy. It just focuses them a little bit more on the task at hand rather than trying to buy land and stuff like that. So anyway, pretty normal stuff out of Tesla. Nothing mind blowing, and there really shouldn't have been anything mind blowing with so much information, and them still in the middle of growing. So Tesla with nothing really going on today. It's kind of a nothing day. We should have slept in. It's really what should have happened. Hey, what's up, Black? There's Tesla. Not a whole lot going on. There really shouldn't be. NASDAQ, middle Bollinger Band line. Need to see if this is going to act as resistance. So far, it's a little bit of resistance. Let's go search the Google Sphere for, where's my chart at? Oh, this one. Yeah, it's about time to sleep in. They always have some interesting articles on the Firefox homepage here. Dallas Buyers Club. You should eat salad for breakfast. Wait, don't leave. That's funny. Maybe just I should eat salad for breakfast. Cool. Let's take a look at. I don't think they have Tesla.com/investors. I think it is. Investing. Corporate. That's dumb. Oh, it's corporate. That's why. See if they have a new slide deck. 21 shareholder meeting. See if they have a slide deck. Oh, it's ir.tesla. It's a subdomain. That kind of makes some sense. Okay. October 20th. What is this? October 20th? That's in 2 weeks. All right, let's learn the future. Let's learn. Oh, it says second. Okay. Says the second. Got a typo. So they don't have. They don't have any press deck. Where was the shareholder deck? There you go. So I'll just go off this one because I was talking a little bit ago about. Let's see where they have deliveries. These deliveries, total production. Yeah, so they mentioned that. Oh, here we go. That's the slide I wanted right there. Market continues to turn down. Yep, it does. It is still on that trend right now. Next year, I'm going to be able to put between 500 to 1,000 a month into stock market. What do you think my plan should be? Oh, very nice, Ted. Very, very nice. So you feeling better, man? Like all's good on the health front and wife's good and everything? Well, um, so I think that that's a great question to ask. I think that you need to take your whole, not just your investment, but like your whole financial picture. I think that should all be at play, right? Like, what's your debt situation? Like, I don't know if you own your home or not. A lot of that, a lot of that stuff needs to, a lot of that stuff needs to come into play. I mean, you already had a scare once. Um, so between you and your wife, I mean, I think it's probably, I mean, it'd be better if you were to pay off your home, stuff like that, if it's not already paid off. Um, you know, I don't really have any debts outside of the home. We're going to pay that off pretty quick. I mean, on the investment front, yeah, being aggressive. Um, I mean, cryptocurrency, Bitcoin's always an excellent choice. I think we're out of the down little miniature downtrend. We're there. I think we're ready for the next leg up, and that's not going to net you that much. Um, I think piling into paying off all debts before investing. Well, it needs to be part of the conversation. I'm not saying it has to be everything. You have to pay everything off before you invest, but I'm saying that if you have like $40,000 in credit card, consumer car debt, student loans, stuff like that, that stuff needs to go away. Just completely. It just needs to go away. Because it holds you back. You know what I mean? It completely holds you back. And not only that, you're paying interest to those entities as well, which is the opposite compounding that you want to do. You're compounding the money that you spend out, not the money that you're coming in. 2 years, oh, that's cool. Yeah, no, you don't have to it's not that you have to. So yeah, okay. So looks like he's pretty good. I mean, I think the TQs are great, to be honest with you. I really do. I was doing some numbers on the TQs. Um, I don't think I have the spreadsheet up still. Let me see here. Okay. Let me see. I can find my spreadsheet. I did some work on the triple Qs. Yeah, I did this a couple days ago. Let me pull it in here. So this is from 2011. And I think this is pretty darn aggressive. So this may be, actually, Ted, this may be right up your alley. So 2011. So these are all the yearly returns of the TQQQ from 2011 to 2021. So the average return is 63%. I mean, that's pretty aggressive. Hey, what's up, Ellie? It's hard to get more aggressive than a 63% return and be consistent. It's extremely difficult. So if you started in 2011, you would have ended up with, actually, that's wrong. This would be higher because that's 124%. So this should be, oh, this is wrong. There we go. Okay, so that should be 224. Anyway, okay, so then 18%. So I just added it up. So every year, including the negative years, and in 10 years, you were at, by doing basically $1,000 a month. I think it's $800 a month because there's 12 months in a year. You'd be at 2.9 million based on just doing the TQs. Just doing the TQs. Actually, yeah, Tesla. Let's do Tesla, actually. That'd be interesting. And not like the market's doing anything. So let's do that. Let's take the TQs versus Tesla, Ellie. I'm not mad at that at all. I think that's pretty good. So let's do this. Let's do the average return of the TQQs. Move this over. I'll move all this down. That's a good one. You know what we'll do? We'll move this over here. And we'll move this over here. Jerk on imaginary profits. That's how we roll, Ellie. That's how we roll. So yeah, we could do the same for Tesla, actually, because it's almost the same time frame. Just need to find a pen. Hold on a minute. Let me grab a pen, and we'll jerk on imaginary profits. Okay, so pineapple. Not familiar with that one. All right, so I'm gonna do that off screen a little bit. Let's throw the Tesla chart up here. What's crypto up to today? Bitcoin's up a little bit. Ooh, Solana bouncing back 6%. There you go. All right, so let's throw Tesla in the mix. I guess I could just take a bit of a shortcut here. I mean, yeah, let's just take a bit of a shortcut just because, well, yeah, because it doesn't, well, no, you're adding investment every year, so I can't really take, oh, this does go all the way back to 2011. Wow, these guys were old. All right, so let me, okay, so 2011 to 2012. It's like 8%. It's basically flat. But let's just say it's 8%. And then 2012 to 2013. 25%. 2013 to 2014. Now I do want to keep in mind this is a kind of an abnormality in terms of performance. I hope we'll all agree with that. This is not normal. Past performance definitely not indicative of future results right there. So say 333%. Because I think Ellie's right. This is gonna massively outperform what the TQs did. But at the same time, I mean, over the next 10 years, we'll be pretty good. Yeah, that's fine, Ted. I'm not. This is just some boring chart work, anyways. To be quite frank with you. Let's zoom in here. All right, so 2014 to 2015, 39.12%. I guess the question is here: is it better to be involved in the TQs or to try to pick the next big winner for the next 10 years? And Tesla's going to be a big winner for the next 10 years. The question is how big. I mean, I think that's a valid question because we don't know. We just don't know. 12.24%. And then 12.24% to negative 5.8%. They still perform really good during that time frame. Jeez. $2018, 45.73%. 3.05%. So we have a couple of nothing years, and then we're going to get to multiple hundreds of percent. It's going to be funny. January 2020, 33.42%. Yeah, see, you're really going to benefit in this one because all the gains were last year. So you've already invested pretty much all of your stack ahead of time. So the whole compounding thing is going to really work in your favor in this particular horrible example. And then December 2021, 708%. Sure someone knows that number off the top of their head. 2020 performance of Tesla. And we're up about, let's just say 17%, because that's where we're at right now. All right, so let me run that same algorithm, because I'm a big programmer. And that number's not right. Why did I get this weird thing over here? Huh. Okay, so let's make that dollars. Pull this back in the mix. Hey, what's up, Jared? There was nothing to be had at the shareholder meeting, to be honest with you. Okay, so this one equals this plus this times this. And I don't think that's where I put that. How the heck is that right? M6 plus K7? 12,000 plus 10. Oh, yeah. There we go. You out of here, Blair? Well, wait a minute. Let's get to the grand finale here, bud. $1 billion. So, Yeah, investing in a stock that goes up 300%, then 700% over 10 years greatly outperforms the TQQQs. But if you didn't choose Tesla and hold it for 10 years, then now I don't know if we may have another 300% year in Tesla's future, but I'm not sure if we're going to get 100,000 million billion. Oh, this is trillion. Yeah, there's definitely something wrong with my calculation. Oh yeah, it's going to get screwed up right there. Something's definitely wrong here. It gets tricky when you have these percentages because you have to include the principal. Oh, that's what I'm doing wrong. Ew. I need an if statement in here. So I'm not even. So most of this should be right. Darn it! I don't need to learn how to use spreadsheets because when you have 120%, it's different than when it's 18%. Yeah, you have $1 trillion. So something's definitely wrong. I think this one's right though. All right, somebody go with math. Help me out here. How do we deal with the over 100%? Because we have to add the principal back in, so it doesn't add the when you add that, it doesn't do the principal. So if I do like 10,000, and then I do like 100 or 200%, and I do equals this times that. Yeah, so you know there's 20,000. It should be 33,000. The Tesla would be 3 mil. And I wonder if that's correct then. So it doesn't do the math right with the 100. Not on investments. Yeah, that's what I got right there, Mohammed. What? Yeah, but only on the. So I don't. So I'll just manually remove it, I guess. Whoop, that's not right. Yes. See, I screwed myself up. That's what I did over here. Like that seems like -5%. Maybe it's just on these it really gets jacked up. Because I need to add the principal back in. Because 12,000 would be 22,000. Then you add 25% to 22,000. I mean, that seems right. But then you have this one. It's like I need to add this principal. So I need to add the principal back in. Maybe that's the key there. I got to add the principal back in. Okay, so that's the gain. And then I need to add the principal back in again. But that's only if it's over 100%. Probably the better way to do it. You can tell I don't do this for a living. It still puts us at $1 trillion. Yeah, no, for sure. Something's wrong. I mean, this one's even a pretty big leap right there. You got some pretty big leaps in there. So this one, this is a K6 plus I6. What? I6? plus K6. Okay, so this one, yeah, only 25%. So it's 10,800. And that one's taking L's, no more I's. I screwed up on that first one, leaving the I in there. These take L7. What's the color difference? So 25%. I bet you this will be the same. Yeah, that's the same. Now this is kind of where it gets a little bit screwy. So this is going to be 36,000 times 333% plus 26,000. That's pretty close to accurate. So L9. M8 plus K9. Oh, that's not a percentage. Ah, there we go. 39.12%. These also aren't percentages. 3.05%. 3.42%. 708.25%. That's okay. So that gets to 4.7, 5.5 today. Okay. So that should be a lot better. Like a lot better. I just didn't have percentages in here. So either way, you get to the same result, whether you do the 1 plus or you add them back in. Just some rudimentary mistakes. So you're about double performance with the best years of Tesla versus, well, some pretty good years for the TQ as well. But so I think the down draw to this strategy. So this originally started with what should Ted do with his $1,000 a month, and yeah, Tesla's very aggressive, but what stock is going to be that consistent over the next 10 years? And are you going to outperform this strategy is the key. So if you're doing 10,000 a month, you can get to about 3 million. Give or, obviously these are, I don't know if these are going to happen over the next 10 years or not. Last time we discussed, I don't know about last time, but a while ago we discussed the ES potentially going into something like the 60s or 70s. I don't know if it was last time here or when I discussed that, but yeah, no, it was here. Let's go out to the monthly chart. Just hypothesizing a little bit about these bigger, broader consolidations the market goes in for about a decade. Right there. And, both of these are on the heels of these very large run-ups in the market. This one coming up from the 50s up into 66 is about 15 years there. This one a bit longer from 80, about 20 years. And this one's from about 13. This one's got about 10 years. So I'm hoping we can continue another extension. And if we keep printing money the same way, that's probably likely the case, in which case the TQs, I think, would perform really well. If we go into this type of an environment, keep in mind that the TQs only got invented like right here. So that they have the benefit of all the run without any of the downfall of all the chop. So I think identifying those larger market cycles are going to be pretty key, especially for something like the TQQQ. So that's a little bit there's some management that has to happen there. But if the market is healthy, the TQ is going to greatly outperform. And then if you look at, I think it's stocks that are probably going to do well for the next 10 years. We probably have some good names on the table at the moment. What's up, Ethan? You finished running? What's up, bud? Oh, you want to practice spelling? Well, look at them. Okay. You can practice yourself for a little bit, and I'll jump off in 15 minutes. Okay. And that'll still give us 15 minutes. Okay. All right. Yeah. So looking at individual names, I mean, Tesla, in my opinion, is one of those individual names, and we can make a small list, but I don't know if this is going to be. I'll just make a new watch list. That'll probably be something good to do. Do a long-term leader watch list. Start with a long. Tesla would start that list. I'd also put Net on that list. I think for sure. Net's a fantastic little company. It's not little, but it's not hugely. It's not 150 billion market cap company yet. I don't think. It's been on a good run. What are some other good long-term leaders? Because I think that's a good list to add to, I think. So we can just walk down the action list right now. Jerky English pronunciations. So Netflix in the past 10 years has obviously had a substantial run. I think, BTC. Yeah, BTC over the next 10 years. Yeah. Exactly. I don't mind that at all. Like some of these stocks have already been on massive runs for like look at this, you got Atlassian going from 17 to 420, right? Some of these are some of those leaders. EXPI has a good potential. I don't know if it'll be the leader, but I think it definitely has some potential. Amazon will probably still work out pretty good. We're not going to get Tesla-like returns out of it. Multiple high triple-digit years. I don't think that's going to happen. Probably same with Microsoft. Microsoft will just keep trudging along. These large caps you get great exposure to in the TQs. So here's Net, Cloudflare. It's already had a pretty big run on its own right. Also, from 14 up to 140. Very, very substantial run. But this is kind of going to be all tech. I think that's the easy money, just because that's really where most of the investment is going. I think if you were to do some research, maybe Ellie knows kind of where to find like large investments. A majority of it is in tech. Not too much of it is outside of tech. Tesla is probably one of the only real world manufacturing companies that has a high growth rate. And that's mainly because it is a tech stock. It's able to leverage technology to its core business of making products. So there's very few companies like that have any kind of scale that aren't really tech based. There's not a whole lot out there, at least to my knowledge. Maybe I'm wrong about that, but Salesforce, something like an LAC, it's a lithium company. It's going to ride on the back of something like a Tesla and GM and the electric revolution that's happening. Cloudflare again, Microsoft. So here's the thing, picking individual names, like if you went all in on Tesla and all you did was buy Tesla for the last 10 years, obviously you were rewarded. But if you look at the Tesla chart, like, let's just be honest, there's a long time here of really nothing. You go from, just in garbage returns from 2015 to 2019, that's 5 years, almost 4 or 5 years of kind of subpar returns for a stock you're expecting to take over the world. Then it comes in all at once. That can be mentally taxing to hold through. I think it is. It'd be mentally taxing to. Just plug your 10K every year into that 10K, 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 10K. Boom. Like you've waited 6 iterations of 10K. Maybe you get soft and you get bored and then you take money off the table, and then it goes. So that's why I think the TQs in the market cycle are a pretty good alternative. I mean, you're not making 5, but you're making 3. That's okay. Because, keep in mind where we ended up here. We ended up at, just right now, because this is the current year, we're ending up at 5.5 and 3. I mean, come on. Even second place is pretty darn good. That's pretty amazing right there. So I don't think you can really scoff at that too much. And then if you still have Tesla, just trying to do the fields here, the text, and then you can have some Tesla, you can have some TQs. Is that any better? I think that's worse, huh? You can have a little bit of both of these, and you'll be somewhere in the middle. But I mean, either way, I think you're okay. So I don't know if the TQs have this left in them for the next 10 years. I hope they do. We saw 15 to 20 years for those prior really large market cycles. So we still have a little bit of time to go, hopefully, on the larger macro cycle. But yeah. So, but yeah, picking individual names, I think is difficult. I think if you're going to look for that, like you have to let's look at something else. Let's look at Tesla market cap by year. Because here's another consideration. Another consideration is if you're looking for these companies and you want them to go huge, keep in mind Tesla's like the 6th largest market cap company. You have to find a company that's market cap is small enough to give you the same percentage run. So I don't know what's out there other than TQs if you're not, trading options or something. Market cap chart, maybe that one. Is that market cap? Yeah, there we go. So there's loosely a market cap chart. You gonna make it bigger? It's gonna be the same size. It's a little bit bigger. So you're essentially stuck at $50 billion. So $50 billion market cap. And this only goes back to 2015. So its initial pump was way down there. So in 2015 they were, just call it 40 billion. In 2017 where they were 50 billion. And then in 2018 they were 50 billion. 2019 they were 45 billion. And then 2020 is kind of hard to get your an individual figure. We'll just say 300. And then 2021 we're sitting here, I think about 750 billion, because we're almost a 1-to-1 relation with our stock price, and we're at 784. So you're gonna have to find something that can go from. Now, granted, whatever company you find may not become a $780 billion company. Hey, what's up, Christina? So we're looking for something that has a smaller market cap and can grow to a much larger market cap. So you look at something like a Net. I think Net is one of those businesses that is very likely to do exceptionally well. It's at 50 billion right now. Could Net be a $700 billion company? And so you have to think of it in those terms. A lot of this has to do with market cap and less about stock price. You have to look at market cap. So, Tesla started at 40 to 50 billion. I don't think Net's going to be as popular as Tesla. So it probably won't get to 700 billion. I don't know where it's going to stop. 200, 300 billion or something like that. I don't know. Whenever that happens, maybe it only gets to 100 billion. It's hard to say. I don't know where it can go. Yeah. So where do you think it can go, Ellie? I mean, it's already at 50. Tesla's at 7. If you look at the large market cap companies, Net kind of services larger businesses. I don't know what their cap potential is. So 10x, 10x would be 500 billion then. I was saying 2 to 300 billion. You're saying 5. That would put it, 500 puts it in number 10. Shitcoins from page 5 of CoinMarketCap. Yeah, just do that. Page 5, that's right. Is that where you start? Christina, is page 5? I mean, Net's a good one, but I don't think it can become as big as an Nvidia or a Visa. Um, I don't think it has that reach. It doesn't have that pricing power either to kind of charge a lot of stuff. I mean, Net could 5x, which would put it at 250 billion, which would put it right up in here with Comcast, ExxonMobil, Pfizer, Nike. I mean, it's a very quality company. I think it could put it up. It could put it up here, but that's going to be a 5x. It's not going to be, it's not going to be Tesla. So doing that or doing the TQs. I mean, part of the triple Q, the TQQQ strategy. Hold on, I'm dying over here. Excuse me. I think I'm not dead anymore. um, Part of that TQQ strategy, TQQQ, is kind of getting out of the market when it's going to really fall apart, because a lot of those gains will evaporate extraordinarily quickly. So if we look at the weekly on the TQs, you go through like even 2018 bear market right there, that's really hurting you. These drawdowns, this was about a 50% drawdown. So now keep in mind the returns I was just showing, that's just holding the TQQQ. That's not, if you avoid a very large market drop, hey, what's up, Farhan? If you avoid a very large market drop in the TQs, you're actually going to do yourself a favor, because you're probably going to outperform even Tesla if you can avoid some of these big drops in the TQs. And then like 2020, for instance, right? This is my actionable list. These are the stocks I think that are behaving better than pretty much most other stuff in the market. In my opinion, charts look better, stuff like that. Yeah, so I've got I also have a global watch list right there. Most of these others I really don't use, but yeah. So like if you were to exit, because I think we did a decent job in 2018 here of exiting, and a decent job. So I think we missed like 10% of the downside, 5 to 10%, and that was a good one. And then in 2020 we did a pretty good job of, I think it was a 25. So we probably also missed about 10 plus percent of that drop. Like I think that's, if you can miss 10% drop, that's a 30% move in the TQQQ. That's a huge advantage. Then you jump back in and just keep riding it up until you get something macro again, which I don't really think we have anything major macro on our hands quite yet. But yeah, so I think that's got to be part of the strategy with the TQQQ. Is avoiding those really major drops for a couple of reasons. I mean, number one, it does bank in some of your gains. And number two, in case things really do hit the fan, I mean, it is a 3 times leveraged ETF. So there's still a little bit of risk involved with that. Although I don't think it's as much as the quote unquote professionals seem to like to tell us. I don't think that's what's going on here. There we go. So, I mean, in my opinion, I think Tesla is an awesome investment. I think the TQs are an awesome investment. I think Net is a pretty awesome investment. No, don't go SQQQ. Don't do that. I wouldn't do that at all. Reason being is because I actually did that during the 2020 market downtrend, and it didn't work out well for me. By the time I was comfortable enough going short on the going on the SQQQs, there was it was this stretch right here. There was a weird stretch where I think I shorted like this day, and we were down here and I was flat. For some reason in the algorithm. Maybe it's just too much money involved. I really have no idea why it was, but not to mention that, the amount of time you can make money on the SQs are pretty small. So I think it's more wise to just step to the sidelines. Like say you got this whole drop here and you stayed involved and we get a low pump and then we start to drop again. You just step to the side. That's all you do. You just step to the side and you don't need to make that money on the way down. You don't, because it's very short money, and it's very unclear money. Like, you get these big ass rallies, like look at this day, and then you got 3 days where you close at the low, then close at the high, close at the low, close at the high. Like these, by the time you're confident to flip it, it's already if you're buying down here, you're going to capitulate and sell back up here, and then you're going to be taking a 27% loss. Like, that is untenable. Absolutely untenable. I would just stay cash in corrections and wait for the market to correct and then jump back in. That's all you need to do. That is all you need to do. You don't need your directional play is cash. Because keep in mind, if you go from a triple up to a flat, you're essentially going triple down automatically. If you go SQQQ, you're trying to leverage yourself again. Because if your default position is a triple leverage ETF and you go cash, then you're essentially going short. You're 3 times going short just by going cash. If you go SQQQ, you're leveraging yourself again. And I'm not sure if it's 6x or 9x at that point. But anyway, so yeah, just stay cash and then just jump back in. So, if I jumped out here and then jumped back in at the lows, I would have gained 44%. So if I had 20,000 in, and so if I had 20,000 here, and then I sold, and then I jump in down, let's just say 40%, that would be an additional, $8,000 worth of shares I would be able to purchase. And then that compounds on itself on the way back up. So by the time you go from there to there, you're up 60% on your 40% compounding. So just by selling, you're going short automatically. I think that's the safer, more winning strategy. Is that right there? Because you go from 20,000 to 28,000 and then back to flat, you're up 60%. So 28 times 60% is what? That's an additional 16,000. So you're at 28 plus 16. That's 42,000 when you were at 20, just by going cash. Strictly by going cash, go from 20 to 42. You don't need more than that. And if you take that 30% loss here, if you just flip this 30% loss right there, if you were at 20, that's taking you down to 14. If you bobble that, right? So then you're down at 14, and then you get back in at 14. You can buy less, and then so you're at 14. 14 to 60% is called 9,000. Actually less than that, and then you're at like 22,000 or something. So you essentially have a 100% swing by not going short. Never go short in an index. I think it's pointless. I played with it here and I was right, and I still ended up flat, which still boggles my mind to this day. I really have no idea. I don't know how that worked. But anyway, we don't need to pretend that we're smart. To be quite frank with you, we don't need to pretend that we're smart and go short. You just stay cash when the market gets bad, because it'll come back eventually. And so, this was just really a prime example. Yeah, it's not safe, Ted, but if you want to be aggressive and you can kind of be in tune with the indexes and stuff like that, it can be very, very advantageous. So then we can if you take our little net worth calculator here, if you do that 2020 example, not that this is going to happen again in the future, but let's do this. So this is, well, I guess I'll just do a simple calculator version. So, so you're up 130% in 2020. So you're 1.2611261,337, and so let's say you times that by okay, so that's where you were at the beginning of 2020. It was 1.2. You multiply that by, let's say you lose 15%. Let's say you lose 20%. Okay, so that's 0.8. And then you're able to buy 40% more. I'm going to screw this up. Oh, and I got to go too. I promised my kid I'd help him with spelling. So then you're able to times 1.4. And then you end, this is just back to flat. And then you end up times 1.6. So let's see if my math is right here. So you're at 1.2 at the beginning of 2020. You sell down 20%. Okay. You're able to buy back more, 40%. So that's equivalent. This is just cash, though. I'm not taking shares into account. So I'm hoping this is going to come out right. So, and then you're able to buy back 40% more shares. And then you're able to, at break even, be 60%. You're at 2.26 at break even from 1.2 in that selling's just buying back scenario. And then so if you were to plug that in here into the 130%, whoops. And now this won't be quite accurate because let's just say times 2. You're at 4.5 just by that one flip of the TQQQ. Just by one. Potentially, because again, I could be way off on this. But yeah, so instead of 2.9, you got 4.5. So, all right, guys, I got to bounce. I got to go help my kid. You guys have a great day. I'll see you guys in Crypto Show or here on Monday. Bye-bye.